Good morning, everybody. I can see the participants running in. Sorry, I've just run downstairs, so I'm a little bit out of breath. Bear with me. I got participants. Good morning, Aaron, David, Martin, Jeff. Good morning to you all. I can't go through you all, obviously, there's too many, but there you go. Ross has just joined. I'll just give it a couple of minutes because we're right on time, I think, aren't we, today? So I don't know about you, but I could always do with a few more minutes grace, as it were. We're starting. Okay. Okay, we've got some more people coming in. I think what we'll do is let's kick off. I think, if that's okay, we can ensure that people can join us throughout the presentation. Good afternoon. It's Jonathan White here from Knowledge Bank, and it's my absolute pleasure this morning to be hosting Roma Finance. We've got a session to talk a little bit about what they're in the market for and how they help intermediaries. We're joined by Alisha Chu. Alisha graduated from the Salford University in 2022 with a first-class honours degree in accounting and finance, which is brilliant, and joined Evolution Money as well during that period. So she's now working as a BDM with Roma Finance. And Alisha, we're delighted to have you here this morning to talk to us a little bit about what Roma can support intermediaries with.
Yeah, I'm happy to be here. Thank you for having me. Shall I just start off with the presentation then?
Let me just kick off first.
Okay.
The purpose of these sessions really is to ensure that intermediaries have an opportunity to find out more about a particular lender. So to the audience, what I do is encourage you to ask questions, use the chat box. I will be interpreting those questions and passing them on where appropriate. So please, enter into dialogue. If you've got anything that's burning, just talk to us about that. My role is really just to facilitate. We've got some questions that we'd like to ask you, some polls, 2 or 3 polls during the presentation. Alisha's going to take you through a set presentation, but hopefully you come up with some questions, and we've got some opportunity to cover those points as well, and also the pre-questions that we had from you when you booked into the session. So there's plenty of material, plenty of content. I guess, Alisha, we're really keen to find out what Roma is famed for. Clearly, the buy-to-let and also bridging, I would suggest, is in my understanding of what you do, but I'm sure it's much more. I'd like you to talk to us about, why we should use Roma and how it can help us to help our clients.
Perfect. Shall I take over from here then?
Yeah.
Okay, perfect.
Absolutely fine.
So really happy to have you guys here with me today so we can discuss our bridging finance launch, Go with the Flow. I've got some slides here that I think will be really helpful, but I'll try not to bore you too much. So first things first, at Roma, we try to understand the borrower first, so we don't necessarily are overly concerned with the property, and that's why we underwrite the person first before underwriting the property. So we want to understand, what are your customers' motivations, why are they in the space, what they're looking to get out of it. Something else that we look at is their background and experience. So are they an experienced landlord, developer, or are they actually new to the space? So we can consider all types of customers. I would say an important one is, are their costs and timescales realistic? So I would say in the current climate, we've seen cost of materials go up significantly. We've seen firsthand issues with, timescales of the projects. Have they factored in a contingency into their costings? Have they allowed enough time for the project to finish and exit the bridge? And that leads us to our last question, is how do they plan to exit? I would say this is also a really important one. So I think for any bridging lender, we need to understand the borrower's strategy and how they're planning to exit. Is it feasible? Is it realistic? If the exit sale, have they allowed enough time to sell the property? And if it's a refinance, have they got a couple of options in the background? Because refinances aren't as easy to get these days as they once were. We'll go on to the next slide. So this is just a general overview of the products that we offer. So we offer standard residential bridging, which is our single bullet loans for purchases and refinances. We also offer single bullet loans for commercial and semi-commercial, again, purchases and refinances. So we also offer refurbishment bridging finance. We look at this a bit differently to other lenders. So how we categorize our refurb products is light, medium and heavy refurb. And we assess it by the cost of works against the property market value. So let's say for our light refurb product, we would class that where the cost of works is up to 50% of the property market value. So if a property is worth £100,000 and the cost of works are £50,000, we would class that as a light refurb product. Anywhere from 50% to 100% we would class as a medium refurb product, and anything over, so where the cost of works exceed the property value, would class that as a heavy refurb product. We also offer development finance, so it's your land with your planning permission, and we can support residential developments, commercial developments and semi-commercial developments, and we will lend up to 65% of the LTGDV. And again, for your auction finances, we can help those auction purchases because we have the bridging facilities, we have the bridging processes that can help the borrower complete in a timely manner. And we also offer a developer exit. So this is for your wind and water type properties that are residential. We can help if the borrowers run out of funds and they need some more money to finish the project, or if they're running out of time with their existing lender, we're more than happy to come in and help. So what is Roma Flow? And this is what the presentation is going to be predominantly focusing on. So we define our Roma Flow process as the speedy channel for standard residential bridging, auction and light refurbishment. So what you can expect from our Roma Flow process is intelligent touch underwriting. So it's not going to be a computer says no, you're going to have a dedicated underwriter that is happy to talk to you on the phone if you've got any problems, communicate with you ways that we can sensibly overcome any problems that may arise. We also require minimal documentation. So that consists of a signed agreement in principle, a signed application form, evaluation, which we can also offer an AVM and a desktop valuation, and I'll go into more detail in that later. And if works are being carried out to the property, we will require a schedule of works. Now, for all of our documents, we can accept electronic signatures. And once the underwriter has reviewed the credit report, if it all checks out, we won't need to ask for any bank statements. So once the underwriter has assessed the application, solicitors will be instructed within 24 hours, and you'll continue to get that dedicated support from your underwriter. And you'll be allocated a case processor, otherwise known as a completions agent. They're great, especially at solicitor stage where things may stick or solicitors need a nudge, because sometimes they do. And we've also got some fancy apps to streamline the process. So we verify ID through an app called Credas, so it saves you time sending over passports, proof of address. And if the underwriter does require bank statements, we can just send out a link for open banking, which again will speed the process up. And 80% of our cases under Roma Flow will complete in under a month. So that's just what I just went through, was more of a general overview of what we offer at Roma, but we have released a product range in October that I would love to go into more detail with you guys. and that is our Roma Flow product range. So it consists of 3 products: Flow Bridge, Flow Refurb, and Light Development. They are only for residential properties in England and Wales. And they are made for where the exit is going to be refinanced. 80% of these products will complete within 28 days, and we offer desktop valuations for our Flow Bridge products. So just to go into a bit more detail, for our Flow Bridge, we can lend up to 75% loan to value, and we can offer desktop valuations starting from £200, and these are for loans up to £500,000. Rates will start from 0.9%, and this is what we'd class as our single bullet loans. Now, for our Flow Refurb, we can lend up to 70% loan to value, and we can also assist with the build costs, where the cost of works are up to 25% of the property market value. Rates are going to start from 0.93%, and the funds that we release towards the works will be in the form of drawdowns. Our Light Development product is pretty similar to our Flow Refurb. It's just the bracket for the cost of works is wider. So again, 70% loan to value we're happy to lend to, and we can assist with the build costs where the cost of works are between 25% and 50% of the property market value, and rates are starting from 0.95%, and again, drawdowns will be included within this product. Just a bit more general info about our bridging criteria. So we are really flexible, and we can tailor our terms to the brokers however they need, whether that's adjusting the arrangement fees. There are some products where exit fees are applicable, so we also have the flexibility to remove them, and we can also sort out commissions, all of that. For our general product guide, we do lend all over the country, Wales, Scotland, and we can provide solutions for residentials, HMOs, semi-commercial, commercial, any type of conversions. I think an important one that I would say is that with our commercial bridges, we lend a 65% loan to value. However, if they were to take out a refurbishment loan or a development loan with ourselves where the property is commercial, but they're going to be converting it into residential and it fits into our light refurbishment product, we'd be happy to lend 70% loan to value towards market value, because the end result will be residential. As well as offering desktop valuations, we also offer AVMs at a price of £30. I would say this is more for your standard residential properties. And we can also offer 100% funding with additional security. So again, this can be in the form of a first charge or a second charge over residential property. I touched on it briefly, that we also offer developer exits. So that, again, this is for your wind and water type properties, and the rates are starting from 0.93%, and we can lend up to 75% loan to value. I would say that we're seeing a bit more of a demand for the developer exit products, and for our bridging and our Roma Flow range, we do offer a titled insured legal process, meaning a quick turnaround time, and that's probably why 80% of our cases will complete in under 28 days. So our loans start from 75,000 and they go up to 3 million, depending on location. And for a single property, the max that we'll offer is 75% on the LTV. And your process at Roma, you will always have a dedicated point of contact. So whether you'll have a dedicated BDM, whether it's myself or one of my colleagues, you'll also have an underwriter, a completions agent, and a customer service agent post-completion. So you'll always be able to get a hold of someone if you need support, or you just need to find an update, really. So this is a case study for one of our Roma Flow products. I thought it'd be great to share with you because it just shows that we can complete really quickly, especially for those auction purchases. So this was a purchase of a residential property at auction. The borrower was an experienced property investor, and we managed to complete within 12 days under our Roma Flow process with the use of a desktop valuation as well. We lent the borrower £128,250 over 6 months. Again, title insured legal process, so that's what speeds up the whole process, and completed within 12 days. I would say this case study is a bit of a Roma favourite because I think it's an example of the type of customer that we can lend to. So it's not just the experienced property investors, it's not just the experienced landlords. So we had two directors who were experienced by trade, but this was their first project for themselves. So as you can see on the left, they purchased 3 retail units, wasn't in great condition, and they needed money towards the purchase and towards the build to convert into 3 terraced houses. So we provided a gross facility of £473,000, helped towards the purchase, that funded 100% of the build costs, and their estimated GDV of £990,000 was bob on. And I think it's just a great example that's showing that we do just underwrite the borrower first before underwriting the property. And yeah, I managed to get through that really quickly, so happy to answer any questions.
Thank you. That's brilliant. That's a brilliant overview, Alicia. I mean, I've got some observations around the market seems to be it seems to have a significant area of delay in valuation and solicitors. And now I know you talk about some of the changes you've made, but is there anything you can sort of suggest around how Roma can support over and above what you said?
Yeah, so in regards to the market and specifically valuations and solicitors, so we do appreciate as well, things are taking a lot longer to complete, and that's why we have released our desktop valuations, because we can get those figures back and the comparables back within a day. So again, speeds up the process. In terms of solicitors which can delay a bridging loan application, I would say it's really important to pick a solicitor who has the expertise in bridging and development. It's very different to a standard mortgage application, so I'd say that's really important as well.
And the market in terms of the market in terms of buy to let, how are you viewing that at the moment, and what kind of response are you getting from landlords about holding their sort of portfolios?
We're seeing it on two sides, really. So I would say for the more experienced property landlords who have portfolios, who have a bit of financial flexibility, they are retaining those properties. But I would say for, let's say, landlords or less experienced investors with fewer resources, we're seeing them giving up their properties and putting them onto the market. But it's exactly these properties that they're putting on the market that these experienced landlords and property developers are snatching up.
Yeah, and I think that's I don't know if the listeners have got any questions, any specific questions for you. It would be good to hear from them if they do have. I also want to touch on service. I think the one thing that strikes me about this part of the market is keeping a cool head and having good service when there's lots going on and the applicants can be a little bit stressed during maybe the build process. So we're hearing great things about the service from Roma. Talk to us about why that is and what's changed.
I would say the great service at Roma is just genuinely the colleagues and the people working here at Roma, because we're all dedicated towards that customer journey and we're all a part of it. So every colleague will, whether it's myself as the BDM at the start of the process, I will continue to give that support towards the broker, towards the borrower, and so will the underwriter during the underwriting stage. So the broker and the borrower is always going to be kept into the loop. There's open lines of communication that we keep open, and we're very transparent. Even post-completion, we have a contact strategy with our customer services and borrowers. They do regular account reviews to make sure, do they need help with anything? Are they struggling to exit? Do they need support with that? Are they experiencing delays with their project? Do they need extra time? Do they need extra funds? So again, it's just that line of communication, honesty and transparency. And I think that's why most brokers and borrowers work well with Roma.
And is that a service that post completion, obviously there's that contact strategy, which is fabulous. Is that alongside the broker? Is it performed directly with the customer? How does that work in its in its current form? Because obviously there are some triggers around redemption.
Yeah, so like because what we do is we always include the broker and the borrower. So even post-completion, the broker is going to get regular updates. They're going to know what's happening with the loan. We have seen it with some brokers where they're not really overly concerned post-completion and they'd rather we just deal with the customers directly. That's fine. But generally, we will include the broker in every stage of the process.
Yeah. And that, you know, how far out are people looking in terms of redemption? You know, are they contacting you, or are you driving that conversation with borrowers?
I think it depends on the borrower. So for us at Roma, we'll always drive that contact strategy. So our customer service agents are on it. You know, they do midterm checks. You know, they're constantly communicating with the borrower. It's sometimes just up to the borrower whether they need that extra support. You know, if they want to reach out to us, we're always there to help them as well.
That's you know, that again, that's really sort of comforting to hear. I think that there's two aspects of this part of the market, isn't there? There's obviously the product. The product is important, but also I'm going to draw it back to, of course, the criteria. And the one thing I hear when we talk to bridgers, but also on the buy-to-let front, you know, your criteria is constantly changing, presumably. That's updated. Hopefully that's updated within Knowledge Bank, of course. But what's the sort of house view on flexibility around the criteria? Is it something that you regularly flex, or are you pretty clear on what loans, what kind of lens you want to do?
Well, I would say we are in an ever-changing market and a lot of things are changing at the moment, but I would say that the criteria that we've set out today and that I've gone through is up to date on Knowledge Bank, and we can be flexible. So we do have product guides, and again, it's just a guide. So we are really flexible in what we can lend and what we can offer, and generally we like to take that commercial sense approach to a deal and towards a borrower. So if it makes commercial sense to lend, we're going to lend. Absolutely. And I know you mentioned nationwide. Are there any hotspots for you in terms of and also, did you mention Northern Ireland, or is that? No, sorry, it's just England, Wales, and Scotland.
Is that not included? Okay, all right. So in terms of hotspots, are there any, you know, areas that you really see flourishing at the moment in terms of bridging and buy-to-let?
So in terms of buy-to-let, so we used to have a buy-to-let product. We've temporarily taken that off the market because we're going to be launching a new and improved buy-to-let product in the new year. So watch this space. In terms of hotspots, so I cover the southwest of England and the South Wales, and for me, business has been booming. It's non-stop. So I would say, and I know my colleagues as well are also really busy. So it just seems to be business is booming everywhere at the moment.
Yeah. Okay. Because I know that properties in the north, particularly, are starting to become a bit more favourable again. So presumably your colleagues in the north are doing even better. I don't know. Is there any other? Are there any other questions? I've got a question from. Let me just have a quick look at the questions. Like, the questions are starting now to come in. Yeah, good question, David, from David McDonald. You know, as a general question, what's the lender view on property prices? Are they falling?
I think regionally it's going to vary. So there are some areas that I cover in the southwest that I have noticed that the house prices are falling. And I think that's just generally just due to the low market confidence, a blend of the increased mortgage rates and increased living expenses. But, you know, not to try and sound too negative, but, you know, the Bank of England did raise the interest rate 14 times. It's going to create a low market confidence. But they have decided to hold it, and we are expecting mortgage rates to come down. So hopefully that will help the recovery of house prices again.
So, but you think that there's a sniff in the air that questions are that prices are possibly falling.
Yes.
Okay. Interesting. Is there anything else that you want to kind of add to what we've already said in terms of why should I consider using Roma? You know, what's the one thing you want people to go away remembering Alisha?
Well, I'm not going to say products because every lender says products, but I would say particularly
Yeah.
in this market and this current climate, I think what a lot of brokers may be feeling or borrowers is a lack of certainty. And we've got 9
Yeah.
funding lines. We've just secured a new funding line worth £120 million. So our funding is strong and we've got a lot of money to lend. And
Yeah.
if you're looking for certainty, then Roma is the lender to come to.
Yeah. In terms of certainty to the market and longevity, brilliant. Absolutely brilliant. There was another question here that I'm just going to cover if I can get to it. Just bear with me. There's a what's the view? I mean, how do you additional costs where you know, you said it was a brilliant lend, that example that you used, and it was I think you used the term bob on, which is a good old northern phrase, isn't it? Can you just talk me through what happens when maybe things don't go so well? What words of advice do you have for brokers in that instance?
So I would say when things are not going well, I think what's important is honesty and transparency. So, you know, definitely myself and my team and the underwriters are going to be looking for a way to sensibly overcome any problems that may arise. You know, that could be due to a down val, and we may not be able to offer as much as we once could or originally proposed. But then there are other options that we could look at, as, for example, additional security that we could take a charge against or a cross charge, which could help.
Yeah.
So that's just one example.
Yeah, and I mean additional costs and if the costs change during the you know, the works, you're flexible around that, and you're working
absolutely. So
closely with the customer.
You know, post completion, if they had an original refurbishment or development loan with us, we have our customer services agents there. So then that communication is open. So then if the borrower needs longer to complete a project, or if they need more money towards the funds, which we can do in a further advance, they would come back to the BDM and we'd sort that for them. Yeah.
Okay, Coke, that's absolutely great. So look, I think we've actually covered most of the conversation. I mean, if I'll give the audience another chance if there are any other questions that we can cover off for you. The CPD certificates for today will be sent on to you, and I know that we're hugely grateful for you, Roma, for spending time, and you know, I'm pretty sure that you'll be following up with the participants of the session today. So you know, if there's no other questions, what I'd say is thank you very much indeed. Thanks to everybody that has attended, and we look forward to seeing you again very soon.
Thank you for having me.
Thank you.